guys, this video is going to be on basic concepts of stock market, and that will be in simple English version which can be easily understood by everyone. So if you are already in stock market, you can skip this video. This video is only for learners and the starters who want to enter the stock market. And myself, Avi, I have solid experience in the stock market, and I have certifications from NISM, which is recognized by SEBI. So you can trust me. I'm giving a solid information for new mentors in the market. So just look at this video and follow me. All the investments in the market are subject to your own risk. I'm not giving any tips in this video. The stock names I use it here for general example. I'm not recommending any buying and selling or take any positions. I am not liable to the losses you make. This is just for educating and bringing awareness in the stock market. I am just sharing some of my knowledge. Enjoy, guys. Now, what is stock market? To make it simple, I'm just dividing the word stock market. So first, let us talk about market. So we all know what is a market. Market is a place where buyer meets seller. Market is a place where buyer meets seller, and the transaction of goods and services takes place, where demand and supply play their roles. So market is a place where buyer meets seller, and demand and supply decides the price. So it's a simple thing we know. So now coming to stock. What is stock? Some will call it as a share market, some will call it as a stock market. So everything is same. Stock is a group of shares, collectively is called stock. Number of single shares collectively is called stock. So shares are traded in the stock market. We can buy and sell the shares in the stock market. So there are number of companies available in India. For example, Infosys, Tata Steel, TCS, Reliance. So there are large number of companies which we daily see in the market. They produce goods, they do services. We all know about these companies. So just if you want to invest in a particular company, go to stock market, buy the company which you like in the multiple of shares at good price, basing on supply and demand, which determines the price. This is very key thing in the stock market. So buy at good price, and after making some money, sell at profit. So stock market is a place where buyer meets seller for exchange of goods. So here the goods means shares. Stock market is a place where buyer meets seller for the exchange of shares, and the price is determined by supply and demand. So now coming difference between share and stock. This is the common question asked by many people to me, both are same or what is the difference, why some call share, why some call stock. So what is the difference? So there is no difference. I will explain it very clearly. Share means a single share or single item. Stock means number of shares collectively is called stock. For example, if you buy one share of Maruti, so you are sharing profit and loss in the Maruti. You bought one share. It is called share. You are sharing profit and loss in Maruti by buying one share, and that is called share in the company. If you buy 10 shares of Maruti, so it is called stock because the number of shares here is 10. So number of shares collectively or combinedly is called stock. Single thing is called share. It's very simple. To make it more simple, I will give you a clear example. If you go to your nearby retail or stationery store, if you go and ask them for a book, they say the book is not available. I will inform you once the stock comes. So what you ask for? You ask for book. Here, book is a single thing, a single item. The shopkeeper said once the stock has come. So what is stock? It's a bunch or number of books collectively is called stock. So he says, if once the stock come, I will inform you. Stock means number of the same items collectively is called stock, and single item is called share. So it's simple. Single means it is called share, and number of shares collectively is called stock. Why to invest in stock market? There are three important reasons. First thing is favorite business opportunity. Second one, savings for future. Third one, deal with inflation. So first thing, favorite business opportunity. So for example, I'm saying if you are interested in movie theaters business, you're watching around you, the movie theaters chains are earning high profits, you want to start the same business. But to take all these permissions to set up that business, you need amount in crores, but you have amount in lakhs or thousands to invest. So what to do? So we all know PVR is a good movie theater chain business they are doing. So simply go to stock market, buy PVR shares on what you have in your hand amounts. So now you are sharing the profits of movie theater chain business from PVR. So you have entered your favorite business, even you have small investment you have entered, and you are sharing the profits of PVR. So it's a very good opportunity to enter into the stock market, and you can do your favorite business by sitting at home or doing your own job also. You can easily invest into your favorite business. And second example, many people will do in IT's jobs. They know how the company is doing. So he also wants to start an IT company. But again, the same problem, the investment capital requirements are high in crores. So what to do? So for example, let us take TCS, which is already an established a strong business in the IT field. So simply he will go with his amount into the stock market and buy TCS shares because he is very much interested in starting an IT business, but he don't have that much capital. then he can easily buy TCS shares. By buying TCS shares with his the amount he's having, he can easily share the profits of TCS basing on his investment. So, favorite business you are doing by putting the investment what you are having. You don't need to take extra loans or everything. No need to start an extra. So, you can invest in your favorite business with the amount you have in your hand. So, second thing, savings for future. So, there are different ways of savings. There are FDs, recurring deposits, bonds. There are many ways. So, in stock market or mutual funds, it's an indirect way. Mutual funds they also put their money in stock markets and bonds. So either stock market or mutual funds will earn you a good returns in the long term, and it will help for your amount to be saved for the future, for your set goals. Now deal with inflation. We all know the prices of basic necessary goods are rising day by day, but we can't observe the change day by day. Let us assume for years how the prices are rising. So if you are putting your amount in the stock market for next 10 years, let us assume, you will earn a very strong income if you have selected a good company. So that income will exceed the inflation. It's a very good opportunity to deal with inflation. So one, favorite business opportunity, savings for the future, and deal with inflation. These three will be happen at the same time while invest in the stock market. Only the thing you should do is just analyze the company. Put one day, you spend one day on analyzing which company is good for next coming years, which business is going to be good in the next coming years, and invest in your favorite business that is going to be solid in the next 5 or 10 years. So it's a very good opportunity. Just spend one day. You don't need to watch daily. Invest in your favorite business and see the profits that will earn in the next 5 or 10 years. And some will also think we may get losses. Yes, that risk of loss is there in stock market, but only if you select. So basing on the company you select, the risk of loss will depend. So select a good company, a market leader of your favorite business, and just invest for the long run. People in stock market. So people may act as investors or traders. Investors are generally long run. They put their investment and take profits after at least 1 year, and they can hold their positions for more than 5 years, 10 years according to their wish. So they buy equity directly, they buy shares from the market of a particular company, or they can also buy mutual funds. Mutual funds they can buy at a single time, or they can also buy an SIP, that is systematic investment plan. So that will be discussed in the mutual funds video which I will do next. So now how investors look upon the companies and how they choose. They actually look for long run investments. So they look at the fundamentals of the company, that is the assets and the liabilities, the balance sheet, the P&L account from the last 5 years, and the future projects of the company, the management of the company, the brand of the company. So there are many other factors that is called fundamental analysis. So they will do that and they put their money for long run investments. So they are called investors. Now coming to traders. Traders, they will do short term. Short term means they will can buy today and sell tomorrow, BTST, or they can buy today and sell after 2 3 months once their profits are on. So they will look for short run profits, and they look for technicals and both fundamentals and news. So these are all comes for short run. And intraday is a high volatile trading. So intraday means it starts from 9:15 where the market opens and trades up to 3:15 till the market close. So this is the intraday timings, and they can buy the shares in the morning and sell once the profit are on. This is purely intraday. They should compulsory close their positions before 3:15. So intraday they will look upon the instant newses and technicals. They will buy and take profits immediately. Now, types of stock market. Primary market, which is called IPO market, initial public offer, and secondary market, that is stock exchanges. In primary market, the companies directly sell some of their shares to the public. So everyone can apply. The company will issue IPO. It will offer a price and number of shares to be applied. You can check the documents of the IPO issued by a specific company and buy shares directly from the company. In secondary market, here already the listed company shares are traded, so you can buy your favorite company and sell anytime during the market hours. So the regular stock market or the stock exchanges will operate the secondary market. You see daily the Sensex Nifty are based on the secondary market. So exchanges, National Stock Exchange NSE and Bombay Stock Exchange BSE. These two are the recognized exchanges in India. So you can trade any on these exchanges in the secondary market. So what are the requirements to enter stock market? You should open a demat and trading account with a recognized stockbroker. So the recognized stockbroker should get a certificate from SEBI. So you just check online, or if you are opening an offline account, you ask your broker to show the certificate of recognition by SEBI. So it's very important. So you cannot open with a local brokers which are unrecognized, so you can't trust them. You ask your brokers that they are recognized by SEBI, and you can check their certificates online. And next thing, you should fill the required forms by your broker. So your broker, or if you are opening an online account, they will send you some forms that you should fill your personal details and your signature attachments and should give them. Usually they ask identity proof, that is PAN card Xerox, Aadhaar Xerox, and the important thing is your Aadhaar should be linked to a mobile number. and photos, your passport size photos will be asked by your broker, and you should update your bank details. Coming to bank details, you update your regularly using bank. So passbook front page xerox should be attached, and a cancelled check xerox or real cancelled check, some will ask original cancelled checks. So these all should be uploaded if it is necessary in online. And if you are opening an offline account, your broker will ask all these details to be submitted. You submit to your brokers, and a demat and trading account will be opened. The time may be taken 2 days or 3 days, and after that you can easily and happily start your investments and trading in the stock exchanges. So many people ask me what is a demat account and why it is necessary for stock market. So demat account is very much necessary to trade in the stock market. So what is demat account? So if you, for example, if you go to a bank, you will open a locker. So what is the use of locker? To save some important documents, or to save your cash, or save your jewelry or something which is very important in a safe way. So that locker safety is seen by your banks. At the same way, demat account is a locker to make safe of your stocks or mutual funds or bonds. It is a locker to store in a safe way of your shares and mutual funds and bonds. So these demat accounts, there are two demat account organizers, that is NSDL and CDSL. They are recognized depositories that will provide you a demat accounts. So while opening your account with your broker, there will be a question asked, which demat account should be opened and with whom to be opened. The options will be NSDL and CDSL. So you prefer NSDL. It is, both are organized, but according to me, my preference was NSDL. And some brokers may not provide NSDL. They will ask you to sign up with CDSL. So CDSL is also recognized, but my preference is NSDL. So you ask your broker to provide NSDL account. If they say that I am not giving, if you are interested with the same particular broker, then you can open with CDSL. But my preference was NSDL. If they are not offering NSDL, you choose another broker, because a number of broking firms are available in India. All are very top broking firms. You may choose another broking firm which will give you an NSDL account. Modes of buying and selling stocks. So first thing, mobile trading. For this, you just need a smartphone with a data connection and your broker account. You can log in to your account and you can transfer funds from your bank and simply buy the stocks you want. And you can sell at any time during the market hours by using your mobile and can transfer the amount to your bank. Mobile trading now become popular and convenient for all to trade in the stock market. Next one, online trading from your laptop or PC. So for this, you ask your broker to install a software on your PC or laptop. He will do that. You can buy and sell stocks directly from your laptop. And next, making phone call to your broker. So this is an offline transaction. So you ask your broker to open both combination of online and offline accounts, so you can use your convenient way of trading in stock market. So if they opened an offline and online combination account, you can even call to your broker and ask him to buy and sell stocks on your behalf. You just need to say the price, stock name, and the quantity, and he will buy for you. And you can transfer your money by online ways, or you can issue a check to your broker. And next, directly visit broker's office. If you have much more time and if you want to interact with your brokers and other investors, you can reach your broker's office. You sit beside to your broker and you can observe the screen, and you can ask him to buy and sell stocks on behalf of you, and he will do that in front of you. So mobile trading and online trading, online account is enough for trading. Making phone call and directly visiting your broker's office, you need offline account. So you ask your broker to open both online and offline types of transaction accounts, so it will give you more convenience way to trade on your stocks. Please do like, subscribe, share, and press the bell icon for the next video updates.